Welcome to the Tech Report podcast, where we help businesses survive, thrive, and create value.
Well, welcome everybody to the Tech Report, the podcast that is all about helping businesses survive, thrive, and create value, especially in our trying environment today. I'm your host, Brad Stoller. So as we're recording this episode today, businesses are trying to get back as close to normal as they can. The pandemic, however, is trying to make a comeback, especially in the southern states, a little difficult. So many states are now closing down the bars, and there are more businesses that are getting nervous about another possible shutdown. So there's a lot of uncertainty that is going on in the world today. But, we're really extremely fortunate to have with us today one of the top experts when it comes to tax and cash management planning. And he has also become relentless in his quest for up-to-date information on potential government stimulus programs and what it means to small and medium-sized businesses across the country. So our guest today is really known for his futuristic ways in doing tax accounting, and his business has actually thrived during this pandemic. And he's getting ready to expand again. So our guest is not only good with business, but he's a two-time international best-selling author, and he also holds a world record. But I'm going to let him talk to you about his world record because he wouldn't tell me about that ahead of time. So we'll let him explain that. So without any further delay, Patrick, welcome to the Tech Report.
Thanks, Brad. I appreciate it. It's great to be here, man.
All right. So Patrick, you've had a very colorful path to get where you are today, to say the least. Our listeners, I'm sure, would really love to hear how you became so successful as an accounting expert and a tax wizard. But before we get to that, you need to let us know tell us a little bit about, the books that you've written, and what everybody's dying to know is, tell us about this world record that you've got.
So I can't take sole credit for the world record. I wasn't the only one, but I'll get into that in just a second. So
you're still going to let us hang, aren't you?
Yep. I'm going to hang you right there in suspense for just a minute. So the two books, one is called The Magnetic Entrepreneur. So it was a group of us entrepreneurs that got together and, just wanted to share our story, share some of our experiences, some of the things that we've been doing in business to help us get to where we're at. The way I operate, and I feel that a lot of other really successful people do, is collective knowledge is especially in business, is a great help to further on people who are starting to just get into business, right?
You bet.
So that was one of them. That was actually the one that led to the Guinness Book of World Record attempt. But I'll get into that in just a second. My first book, which went international best-selling in both the US and Canada, was called The Spiritual Fitness Survivor. And just a little bit about the emotional and spiritual strength that it takes to, rise above our circumstances. The section of the book that I wrote was called Starting from Less Than Zero, and just speaks about this mentality that we have, or that's most people have, who have never had much success in their life, that they're starting behind other people that may be more successful than them, or
Sure.
maybe their peers, or have attained a higher level of success than them, or whatever the case may be, right? We get into that feeling that we're somehow starting from behind or starting from less. And the point, it's a real simple point that I lay out, is we all come into this world naked and broke.
Yeah,
So
we do.
we all really start at the same level. It's the development of our minds and the decisions that we make along the way that really determine the paths that we take and the outcomes that we achieve.
Well, that sounds good. That sounds like an excellent read for everybody. So could you repeat that again, the title of that, so people can look it up?
Sure. It's called The Spiritual Fitness Survivor. It's gone through a couple editions now, and there's a series on it, and it's actually a great read. There's a lot of multi-millionaires who have just poured their experience into this, and I was fortunate to be a co-author with some of them. So,
wonderful.
And through those connections, that's what led me to the Magnetic Entrepreneur. book, and then through that book led to an attempt on the Guinness Book of World Record. Now the Guinness Book, now I'm going to get into it, all right? So
we've been dying to hear this.
So the attempt for the Guinness Book of World Records was for the most authors signing a book simultaneously, right? So we gathered 179, 180 authors into a conference room in Canada. I think we're in, I forgot the province. Oh, well, not important. Well, we got everybody there. We got everybody together, and we got the Guinness Book official judge to come out and review the attempt. And we had 3 seconds for everyone to sign the book at the same time and then hold it up so that they could judge whether everyone had signed the book. We had to have a comparison of our signatures, the whole 9 yards, and it was a tremendous experience. It was a little bit stressful there at the beginning, coordinating everybody, making sure everybody was in their spots and in a place where the judge could easily, like, you know, count everybody and make sure that the attempt was legitimate, that nothing was being staged or forged, or, you know, that all of these people that were in the room were actually authors. So then afterwards we had a great weekend. It was a blast. It was a party, a melding of the minds. It was a really good time. So
I was going to say, it sounds like the next world record is the number of authors all having a beer at the same time after that celebration.
Right. You know, that's the one.
All right. Well, that's it. That's fascinating. And for all those that you are listening, I asked Patrick before, you know, telling me about this world record, and he wouldn't tell me. So this is a suspense for me as well, and I've been looking forward to this. So that's a great story. So, well, tell us a little bit about, you know, your background. I know you didn't,
Sure.
as you said, we're all naked and broke when we started. Okay, so how did you get to become where you are today as a, you know, a top accounting expert and so we call it the tax wizard? So what led to that, and how did you get to where you are today?
Absolutely. So I never thought that I would actually go into accounting, to be honest with you. You know, it wasn't my particular dream growing up. However, I figured that I would go into some form of entrepreneurship. You know, I was that classical, you know, CD student in most classes in school, except for science and math. The only 2 classes I aced, but as an accountant, you know, math is the only one that counts, right?
Well, we want you to be good. That's definitely for sure. That, yeah, we want a good, you know, somebody good at math, definitely.
So, you know, my father, who was not college educated, was my hero. He grew up actually in the town where I'm at now, here in Conneaut, Ohio. Went to work at a local factory, became a plastic extrusion engineer, worked himself up to doing independent consulting, and eventually opening his own manufacturing company, and ran it successfully for over 5 years, running, you know, 7 days a week, 365 days a year. Became very successful. Unfortunately, he met with a very, very abrupt end to the business when the IRS came and put a lien on everything he owned and the business. And unfortunately, that was caused by a poor choice in accounting professional. You know, he chose to go, you know, not being college educated. He was great with money, but not on, you know, how to keep it, how to keep track of it, balance sheets, profit and losses, you know, the account summary, aging statement, you know, all these things were, you know, payroll taxes, let alone, you know, quarterly taxes, annual taxes, sales taxes, all of that jazz. You know, you get into business because you're good at doing something, not because you know all the compliance stuff that goes along with it.
Exactly,
right?
Exactly.
So unfortunately, because of that, that choice in accounting professional, they cut ties with our family. They refused to give us our information back. And my father ended up getting that lien put on everything he owned, and he had to sell his company and his equipment to one of his customers and go to work for them to pay the IRS off. It gave him, you can only imagine the stress that caused. And he ended up having many strokes, ended up in the hospital,
Oh, wow.
almost had a heart attack from the stress. It was incredibly painful for our family, an incredibly stressful time, because we didn't know if my father was going to die. We had lost our business. We didn't know if we were going to have a livelihood anymore. Incredibly stressful. So that was my very first breach as a young teenager, or preteen, into the world of business.
Right,
Right.
right. That's a great start, I
Um,
guess, right?
yeah,
Wow.
yeah, great or bad. It could go either way, right? Depending on
Exactly.
who you are, that could turn you off from ever wanting to be an entrepreneur ever again.
Exactly.
But I guess I'm just a glutton for punishment, so I was like, let's full speed ahead. And that's what got me into accounting, because it was completely avoidable. It never should have happened. If my father had someone who was an advocate, who was, looking out for his business, and focused on the long term instead of the short term, then my father would still be in that business today.
Right.
Fortunately, he went back into consulting, and he was able to get back into entrepreneurship that way. Um, but yeah, so that was my first foray into business, my driving force into getting into accounting, because I wanted to make sure that if it was within my power, that I could prevent that from happening to anyone ever again.
Yep. It's amazing because I've talked to a lot of people that have, are business owners, if you will.
Mm.
And it's different than, let's say, if you're the president of a company that maybe stockholders own. But when you get into entrepreneurship, there's usually a story somewhere that is
Mm-hmm.
inspired, motivated, just mad as all get out, or whatever it may be. But there's some type of event that has
Yep.
spurred them on, and sometimes it's just, if nothing else, it's the failure or the fear of failure that even will motivate people to do, I guess, to go out there and become
there's
entrepreneurs as well.
there's always a catalyst, right?
I've
Always.
noticed that's very, very much in common. So I'm sure a lot of our listeners are thinking, yep, I had something like that myself. So I think they can all relate to that. So, well, before we dive in and ask about how your business is going and getting into stimulus packages and what it means to listeners, I just would like, if you could, something happened over the weekend, and it does affect businesses. And I guess we are going to talk about the stimulus here a little bit. But tell us what happened over the weekend. The president signed something. Tell us. It's fresh off the press, if you will. Tell us
It
what happened over the
is.
weekend and what it's going to do to small businesses, and how it's going to affect, hopefully positively, them going forward.
So last week, Wednesday, um, the Senate passed the PPP extension bill, and it went to the House of Representatives. Thursday, the House of Representatives also passed that bill.
Right.
So the fact that Congress and the Senate got anything done right before they're about to go on recess,
It's amazing, isn't it?
That's amazing all in of itself.
That's a world
right?
record.
Yeah, that's a world record for sure. But then, as President Trump tends to do, if he gets it on a Friday, he's going to sign the bill before the weekend. So the bill got to his desk Friday. He signed it, and so now we've got an actual extension on the PPP loan, or requesting the PPP loan funds, until August 8th, which the deadline had already actually passed. The deadline for the funds, or the banks to stop accepting and the SBA to stop processing applications, was June 30th,
Right.
which I believe that was Tuesday, if I'm not mistaken.
Right.
So that is now in effect. So this week, and until I guess over the next month and a week, we've got the ability to continue to apply for these PPP loans to, help with the restaurants reopening, to help with companies that may be held off in the first round. And then, I know you said you wanted to wait to get into all the stimulus stuff, but,
Let's
all
go
of this,
for it then.
all of this piggybacks on the other extension of the program that
Right.
that they launched on June 5th, which was the HR 700 Act, and that act essentially extended the PPP program from an 8-week period forgiveness period to a 24-week forgiveness period.
That's huge.
It was very huge. It gives companies more time to use the money, because what a lot of people don't understand is that essentially they give you 2.5 months worth of payroll and expect you to use that in 56 days, which is not quite 2 months.
Right. Right. Exactly.
So it's a very abrupt process, right? And some companies, if their operations weren't damaged over April, May and June, they could use the money over that period because they've got the same number of employees, or they've had to hire more employees. Their operations are still going. But when you've got restaurants that literally their doors are barred,
right?
They can't.
Exactly.
They can't unless they're doing curbside pickup, delivery, or drive-through. They are getting zero business. So there has. I mean, you can only fit so many employees in a restaurant or in a fast food joint or what have you before you're overcrowded and there's no reason to have them there. And it doesn't make sense to have people on payroll when you don't need them, right? That's going to hurt the business more than allowing the people to go on unemployment or what have you. And so those two things in conjunction, the passing of the extension of people being able to apply for the PPP loan, especially after the states are starting to open back up again, and then the regulation change from 8 weeks to 24 weeks, and then the amount used on payroll from 75% brought down to 60%. Those three things are going to be tremendous for businesses across the country. And a lot of people think that it's a very, very easy process. Application wise, the application is easy. To get the loan, to apply for the forgiveness, that's going to be a different story.
That's the tough part, right? So what are some things that they have to be aware of when they're applying for the forgiveness part? What are some things what are mistakes that they might make that could really mess them up?
Well, the hardest part is calculating the average FTE, which, I mean, if you're not, in accounting or compliance or HR, who knows what FTE is? It's full-time equivalency, or FTE, full-time equivalent employee. So what that is on a federal level is that's anyone who makes 40 hours. And if you have people that make less than that, then that FTE calculation, or that FTE average over the 8-week or 24-week period, that reduces, right? And that is the key factor to how much forgiveness of your loan you're going to get, right? So, for example, if you've got 25 employees, and you've got to compare that full-time employee average to your full-time average employee count in one of two periods, either January to the end of February 2020, or I think it's that same period. I apologize, I don't have my notes right in front of me, but I think it's that same period in 2019.
Gotcha.
And if your full-time employee count or equivalency is less now when you're applying for forgiveness than during those two periods, then you're not gonna get the whole loan forgiven. And there's this whole big long, calculation that goes into averaging out all the hours, over the 8-week or 24-week period. And I think a lot of people are going to get hung up there.
Exactly.
And I've seen it. I see it all the time on Facebook and stuff, right? Like, because we try to, make people aware of what's going on and stuff. Somebody inevitably always comments or says back, oh, we'll just spend it on employees on your payroll and you won't have anything to worry about. And if only it was that simple, if really, it would be my heart's desire that it was just that simple. but
Well,
it's not.
nothing's ever that simple when you're talking about stimulus packages, anything
Yeah,
government
when you
programs.
when you're
There's
talking
always
about the government, nothing is ever that easy.
no, it's not, and that's why. And thank goodness we have people like you who actually do stay up all night and look up at this stuff and become experts at it because. As most business owners, as you said, look, we didn't get in it to be compliance people. We didn't get in it to be
Right.
mathematicians and or attorneys. We got in it because we wanted to help somebody with our products and services somehow.
Yep.
So exactly. So well, this has really been. I know we had a lot of things we were going to talk about, but since this popped up, this has kind of changed what we were going to chat about quite a bit here. But so tell us a little bit about with there's a lot of with the first round that came out, there are a lot of people were thinking that, yeah, and you hit on a little bit, but it all had to be used towards, payroll. And then there was a lot of rumor that came around, well, you don't have to use it all for payroll. You can use now for rent and all those types of business expenses. There's still confusion out there. So can you clear this up just a little bit? What's the
Yeah.
new, with the extension, what can business owners use it for?
So there's a few things, and with the extensions, this really hasn't changed the qualified expenses, right? So the qualified expenses are the same now as they were in the original round that the loan got passed, or the CARES Act got passed, right? So that is number one, you've got utilities.
Right.
Number two, you've got rent or lease payments, and that is on physical building property. Then you've got mortgage interest. Now, it's not your mortgage payment because the government's not going to give you money that's going to build you equity, right? So
Okay,
they're not
makes
giving
sense.
towards your equity. They just want to be able to help you pay the interest, which oftentimes, if you've mortgaged a building, your interest payment's going to be larger than your equity anyways.
Yeah, exactly. Unfortunately, it is. Yes.
Right.
Unless you had it for a
And
while.
then, unless you've had it for a while, exactly.
Yeah.
So once again, it helps people that are newly in debt, but not necessarily our entrenched or established, business owners that are, 5 years from paying off the mortgage on their property instead of 20 years, right?
Right.
And then the other thing is transportation. That's actually a big thing. Gas, mileage, tolls. Maybe not mileage. Excuse me. I misspoke. Thinking about taxes. But gas, tolls, things like that. Utility bills, so phone bills, internet bills, gas, electricity, things like that. But unfortunately, the long and the short of it is that the oftentimes for most people those are low overhead costs,
Right.
right?
Exactly.
They're not going to make up 40% of your expenses. Now maybe depending on how much of the loan you got, you may be able to spread that out over 24 weeks. But my experience with talking to people is that actually have the loans is they want the 8-week forgiveness because they're like, I don't trust the government. One, I don't trust the banks either, and that's the other thing, right? Like, it's not in the bank's best interest to forgive the loans.
Exactly.
And that's what people need to realize, that think the bank is, the bank will do what they can to help you out as long as you're a revenue generating business and you're keeping funds in their account. They'll bend over backwards for you. But if you're a regular mom and pop that lives on a shoestring, then what do they care? Whether you get the loan forgiven or get it paid off, they'd rather you have to pay the loan off to them than get it forgiven. Because that keeps you around as a customer longer and allows them to sell more services to you. But that's neither here nor there. We're not here to talk about that.
Yep.
So it's those are mainly the expenses, getting back on topic. And if you spread them out over 24 weeks, it's highly likely that you'll be able to use that 40%, but it's more likely that you're going to opt to use that for payroll. But here's the thing about using it for payroll that people don't realize is that it's not all of payroll, because there's an employer portion of taxes
That's right.
that get paid. There's 7.2% of that payroll comes out of the employer's pocket, right? That's in addition to payroll. Those taxes are not forgivable via standards of the PPP loan. So what ends up happening is people get to the end of these loans and then they don't realize that they've got to kick in money to cover the portion of taxes that they spent paying their employees over the last 8 weeks to go another round of payroll.
So there's some cautions. Proceed, as you say, we'd say cautiously, I guess.
Yeah, I call them PPP booby traps.
Yeah, that's a good name for it. I like that because
Right?
that's so true.
It ends up being a pitfall that people aren't consciously thinking about. So, you know.
Well, this is, once again, it's a very, very complicated. I wish it were it were very easy, but well, it doesn't seem like that ever happens. When we when we get our government involved, there's always loopholes here, and so it does take somebody like yourself to kind of walk people through this. So, well, I'll get back into how they can get a hold of you with some questions, but I know we've covered a lot of things today, with the PPE and the extension of that. But what have we missed so far that you feel our listeners should be aware of with all these programs and how to get the cash flow? We haven't even talked about your business yet. We talked about so much, haven't we?
We've covered a lot, and that's fine.
We have.
I mean, that's the point. That's the point of this. The whole reason that I me being, they don't know who I am, but we've talked, a little bit about me.
Sure.
I could care less if they ever get a hold of me, but as long as they've got the information and they've got good information to go on, that's the main thing. Because even if I do business with someone or not, it's my ultimate goal that they stay in business and that they thrive in business. Because I love entrepreneurship. And my wife calls me a big business nerd because I hear somebody's on a new project and I'm like, ooh, tell me about it.
The inquisitive ones are the ones who usually get ahead. I will say that much. So
right. Or in trouble, either way.
Or well, you're still ahead of everybody else. Well, they're getting in trouble, I guess. I don't know, but either way, yes, exactly. But it's not. It's all good. It's all good.
Some of the main things that people can look forward to as far as like cash flow for their business, if they're having a hard time, is look at previous years. Right now, your tax professional should be your best friend. And it's one of the things that I'm very passionate about in the industry and that I speak up a lot about is that, there's a lot of accounting firms that went dormant over this period, or they're hard to get a hold of because everybody's in panic mode, and they're in panic mode themselves, right? Because, their business is all face to face or what have you. And now nobody can come visit the office and they can't even go to their office because they're shut down. So there's a lot of stress out there going around, but now's the time for people like us in the accounting and even the tax profession, the law profession, to really shine and help people out because we know the law, we know things that are coming out. So a few of the big things are the employee retention grants. Now, some of these things that are in the CARES Act and the Family First Coronavirus Response Act, those things cannot be used in conjunction with a PPP loan. However, we're still waiting on guidance from the Treasury Department on if we can utilize those things after the PPP loan has been granted and forgiven.
Right.
That's a question that's still a little bit up in the air yet. So there's the employee retention credit, which is up to $10,000 per employee for the year that you've been able to retain through the pandemic period. There's also net operating losses, so you can go back any up to the last 5 years tax returns and actually get cash back for taxes that you overpaid because you weren't able to take advantage of a net operating loss in that year. There is $2,000 per quarter for employees who have actually gotten sick or are on family leave or have gotten the coronavirus through this period. There's also a payroll tax deferral, where you can defer your employer portion, or you can defer your employment taxes for up to 2 years. So you pay 50% of your employment taxes in 2021 and the other 50% in 2022. And
Okay.
this
Didn't know about that.
isn't even, yeah, this isn't even the last, stimulus that we're going to experience in this in this next 6 months, and the rest of this year. We're talking about another round of stimulus for families that we got back in April, May, and June, or some people got in April, May, and June. They're talking about another round of that.
Yeah, we've heard about that.
Yep. They're talking about, I know the administration is talking about doing a payroll tax holiday, where they want people to not only defer that payroll tax, but not have to pay it at all. And so that's more money that businesses have to reinvest into their employees, or to stay afloat, or what have you. So, and if that payroll tax holiday comes around, that's going to be a 7% increase in employee compensation across the board. That's what people don't realize. Could you imagine getting a 7% raise?
It sure beats a 20% deferment or loss. Yes, definitely. So that's a stimulus right there. Definitely. People like to spend their money, that's for sure. So, well, tell us, before we wrap this up, tell us a little bit about what you guys do in your business. First of all, just give us a little background where you guys are headed. And one thing we did not talk about yet, because we jumped right into current events here, and it threw us off a little bit here today with what we were going to talk about. But I want to make sure people get a chance to know who you are and your business and what you guys do, and you've been growing. And the one thing that I was very impressed with when I started doing my research on you was that you have been able to adapt. I won't say pivot, because that's overused right now, but adapt.
Right.
And your mode of business really goes very well with what's going on in the world today. So sometimes we can't get out and see people face to face, and your business is set up where it doesn't really matter. So tell us a little bit about that. And I know you're growing like crazy, so tell us a little bit about your business and how you help your clients.
Absolutely. So first of all, Rood Financial is a full service tax and accounting firm. So we do individual tax, small business tax, corporate tax. We also do incorporations, outsourced bookkeeping, and payroll. And one of my favorites that actually we started a little bit of a new policy is that we generally won't take on a new client, obviously with some exceptions, but we won't take on a new tax client unless we sit them down and do an actual tax planning strategy, just as an intake before they even become a client.
That's huge.
I'm such a believer in it, and we've been able to save somewhere around $23 million for our clients over the last 24 months.
Oh my!
And that's without doing that's not including any of the stuff that happened this year with PPP loans and EIDL grants and EIDL loans and all that jazz. That's not including any of this stuff that's been going to get forgiven or what have you. So that's my
before you go any farther, I don't like to interrupt, but you said something that's very, very, it caught my ear really loud and clear, and that is tax planning. And the reason that I bring this up is because most accountants are not necessarily planners, are they? Most are historians. They look at what happened.
They're compliance driven.
Exactly. And then they tell you, well, you shouldn't have done that. You shouldn't have done that. Since you did that, now you're going to get. As a business owner, we're just the opposite. We want to plan out, don't we? So I didn't mean to interrupt.
Most of them won't even. No, you're fine. Most of them won't even tell you, well, don't do this, do this. They'll just say, this is, thanks for the data. Here's your taxes. This is what you owe. And my little joke is that it's not that they were incompetent or negligent. Most are very, very competent. Mm-hmm. It's just that they split your taxes with the IRS. They took their cut and sent the rest to the IRS.
Yeah, and we're left with not
And
much, a bill usually. Yeah,
exactly.
exactly.
And that's really the difference between tax planning and tax preparation, right?
Ex-
Tax preparation is a cost. It's after the fact, nothing, not usually much. There's some retirement vehicles that you can, deploy after the fact, but going along with that, most tax preparers are not financial advisors, so they're not even thinking about that. So that's not even a consideration in their world.
And you
So
guys
tax
do that.
Yeah, we don't do financial planning, but we have so many partners in our network that if there's a financial vehicle that's going to save you taxes, we can implement it.
Gotcha.
Um, so tax preparation is a cost. Tax planning is an actual investment with an ROI.
I like
Um,
that.
yeah, it's a phenomenal thing, and there's over 23 million tax strategies. Nobody can know them all.
Right.
It's literally impossible with our tax code being as robust. We'll use that word.
That's a
As
good way to put
robust,
it.
yeah, as robust as it is. There's so many
Complicated for the rest
loopholes.
of us. Yes.
Exactly. Yeah, to pain in the butt for those of us
I
that
was
work
being
it.
polite. Yes. Thank you for saying what I really wanted to say.
Um, that there's so many loopholes, and if you're not constantly learning as the tax code is evolving, then you're doing your clients a disservice
Right.
because you're not staying up on the latest, you know, strategies. You don't, depending on your industry or your niche, there's a lot of things that can be done to really help people save tens of thousands, if not hundreds of thousands of dollars in taxes. And it's a lot of education. It's a lot of work. I invest hundreds of thousands of dollars into my education, on an annual basis because I work with the top tax experts, in the world, not just in the United States. Um, and we have a staff behind us that's amazing, but it's definitely a necessity for today's day and age tax planning.
Yep,
Um,
exactly. So that's part of the reason I was so impressed with your background and when we started talking about that, and I don't know if our listeners have picked up on this, but as we've gone through this podcast, your excitement level keeps getting more and more and more. We could probably go on for another 3-4 hours. I have a feeling here, but I guess we do have to look at the clock, and most people are
right, I
having to
guess
get
we
back
got
to
to cut it
work or
off
they're
sometime, right?
exactly. But well, tell us now where are you based? Where do you service clients? And just tell us a little bit about that. And the last thing, of course, is how can they reach you when they have some questions or just want to run some things by you?
Sure, absolutely. We cover 11 states. So we started out in Michigan in 2008. Great time to start a business during the economic recession, right?
Yes, I guess
So
so.
So we maintain our office there still. We lost some clients through it, as part of life, part of any recession. Some people are able to make it, but it was able to teach us how to help people through this type of situation, right? So I think it makes us uniquely qualified to help our clients through what's going on right now. But 2008, that's when we started in Michigan. We still maintain our office in Ann Arbor. Some of our strongest partners are there. They've been with us through it all. In 2015, 2016, we opened our office in Philadelphia. We're right on Market Street in the BNY Mellon building. And then we also have an office in Tampa, Florida as well. The states we cover are Michigan, Ohio, Pennsylvania, New York, New Jersey, Maryland, Delaware, Virginia, Georgia, Florida, and California. Um, we primarily work virtually with our clients. We call ourselves a firm of the future because there's a lot of our clients that, other than a video Zoom call, have never actually met face to face.
Right, exactly.
And I think that in today's day and age, as busy entrepreneurs, you've got better things to do with your time and then come and sit in my office, for 2-3 hours getting your taxes done or having a meeting. We're working and living in this global economy where we transcend state lines, where we transcend economic borders from countries. it's insane. You know, we work with anywhere from startups to multi-million-dollar companies, and yeah.
Yeah, you
So the
guys have
best way.
Yeah, you guys have done a great job expanding, and I know we talked earlier, and you're getting ready to expand some more, and a lot of people right now are just kind of hoping they can survive, and here you are going, your foot's on the gas, and you're not slowing down a bit, which is admirable, and I think there's a
Well,
lot
we
of
want.
entrepreneurs that it, there's opportunity every time there's pain for people, there's opportunity for others, and I think you've done a good job with that.
Well, and we really want to transform the industry, right? We want to bring these ideals and these, core values that we have of being virtually available anytime, being proactive instead of reactive, and being consultative, um, to our clients and the health and their individual success, right? Like those are our three core values that we want to instill in the industry as a whole. So as people retire, my goal is to start acquiring firms that
Right.
are, are retiring or they're transitioning into retirement or what have you, because that is right now I can't do enough advertising, right? And by acquiring these firms as their owners retire, that gives us the best opportunity to help people where they're at, to go to where the people are, and help them through a transition to what doing business and doing compliance is like in the digital age, ensure that they have an advisor on tap instead of someone that they can never get a hold of.
Yeah, exactly. Well, this has been great. So how do they get a hold of you when they have some questions?
Sure, you can visit our website, Rood, ROOD, financial.us. You can email me directly, roodowners at roodfinancial.us. That's Rood, ROOD. Yeah, those are the best two ways. You can find us on Twitter at FindTheRood, Instagram Rood_financial, and Facebook at the Rood Financial. Um, those are pretty much all the places we're located. I don't live on social media personally, but a lot of our clients, that's how we interact. So we're very responsive. And I would say that's probably the one thing that my clients appreciate the most, other than the thousands of dollars we save them on taxes, is that we actually answer the phone.
Well, it's made both of those things are important to them, aren't they?
Absolutely, absolutely.
All right. Well, once again, a special thanks to Patrick Rood for taking the time out of his busy schedule and really just to help us get a better perspective on our cash and the stimulus updates. Everybody, I think, appreciates that. So, Patrick, thanks again for being with us here today.
Happy to do it, Brad. Thanks for having me.
All right, great.